Hello and welcome to Moneyline. This is Matt McCall. Thanks for joining me again this week. We've got another big show coming up. We're talking about yesterday's market pullback, and we're holding steady today. What this means, what may have caused this pullback. Bitcoin breaking out to another 2-year high. Are we going into hyperinflation? Is this Zimbabwe? We're also going to talk about a big deal in genetic testing that went through. Liquid biopsies are the future of cancer detection. You need to be invested in this. Then we're going to take your Twitter questions. And of course, I'm going to share some stocks I came up with over the weekend. All coming up on Moneyline.
The buck starts here. Moneyline with Matt McCall.
All right, folks, thanks again. This is Matt McCall. This is Moneyline. It is October 27th, if I'm not mistaken. I must look at my computer. October 27th. It's a Tuesday. It's a few minutes before 11 o'clock a.m. here on the East Coast. Obviously, I was taping the show here a little early. We got the markets down a little bit, really flat. The S&P's been above and below the flat line all day. The Nasdaq is up about 0.6%. And then we have the Dow Jones Industrial Average down 100 points. So really a mixed market. Tech's up. The bigger names are boring names, if you will, are down a little bit right now. But overall flat. And this is yesterday after having a pretty decent pullback yesterday. But keep in mind, even though we did close down yesterday, we closed well off the intraday lows. We had a big rally into the close and closed about halfway in the range of what we saw yesterday. So that's always a good sign. The market to me still looks pretty damn good. We can't go straight up every day. And if I look at what's going on here in the S&P, right now we're still down less than 4% from a historic closing high, from an all-time high. We're less than 4% from that. Let's just think about all the things that have gone on in 2020. I don't want to bring them up, but let's just think about it in our head. That's going on. The fact that we are 1 week, exactly 1 week, from what could be one of the craziest presidential elections in modern history, and we're less than 4% from an all-time high. In a year that we have the worst pandemic in a century, or at least it's been created into the worst pandemic in a century because of the shutdown of the economy. So the bottom line is, it's pretty fascinating that how well we've held up. If I took you today, if I took you last February, let's say even, and said, you're going to go away, I'm going to put you on this beautiful island, but you can't read the news, you can't know anything, just swim and drink beer, eat good food, whatever you want to do. And then today I gave you the headlines, 1 week away from the election. You would think the market would be in a deep, deep recession, a major bear market. And when I tell you that we're less than 4% from an all-time high, we have several stocks breaking out to all-time highs, you would think I'm absolutely crazy or you're missing something or I didn't tell you the whole story. And I get it. So I got to tell you, folks, we have to sometimes be grateful for what we have. I'm grateful with all the stuff we had to deal with this year that we're within 4% from a high. I'm grateful our portfolios are knocking the cover off the ball, crushing the markets. Extremely grateful. I always want more, but that's just how I am. But I am grateful for what's going on here and what we have and that we're healthy and we're able to do this show and you're able to tune in and watch this show. So let's be a little more grateful. I mean, I need to do it more. So I did a little poll on Twitter yesterday. It's about, let's see where we're at right now. We had about 650 votes. And I asked why people thought the market at the time yesterday was down 2%. And they had three choices. COVID cases increasing, Biden leading the polls, or just a normal pullback. And fascinating enough, what came in was just a normal pullback came in at 43%. 40% said COVID cases, then 17% pointed to Biden leading in the polls. I have to agree with you. I'm agreeing with the masses here, which I typically really do. I think it's just a normal pullback. As I mentioned, we're less than 4% from an all-time high. So, to me, this is just a normal pullback. It's okay. So I'm maybe it's because the people who follow me listen to the same type of philosophy I have, and that's okay. But I agree. I will say this, though. Yesterday, I did some buying. I bought two stocks for myself. And no, I'm not telling you what they are. And I bought 2 stocks for some clients of Penn Financial Group, my money management firm. So we did some buying on the weakness yesterday. And that's what we do. We look for strong stocks that have pulled back from highs or pulled back from breakouts and buy into short-term weakness. That's the best way to play the market in the long term that I've found over 20 plus years now of doing this is really just, it's very simple. You buy into solid long-term companies that have great fundamentals, great technicals, great big thematic themes. And when they pull back from highs or they pull back after a breakout or they're sitting on support and they look good valuation, you pounce, baby, you buy. And that's what we did yesterday. Put 4 buys in total. 2 for me, 2 for clients. All right, so I am buying on pullbacks. I'm doing my own money. I will say that. And one of them was a biotech. Go figure. For me, and one for my clients was a biotech. I'm telling you, it's tough to just ignore how strong biotech is right now and how good it looks. You know, just looking at the Nasdaq Biotech Index, it held up much better than the overall market yesterday. Today, it's up 0.4%, again, with the Dow down 100, S&P down slightly. It is lagging the Nasdaq a little, but overall, man, this chart looks great of the Nasdaq 100. And the Nasdaq Biotech Index, the symbol for that is IBB. The chart looks great. Again, I would much rather buy into our own basket of biotech and future of healthcare stocks because with that basket, it's a big basket, you're getting a bunch of crap in there. So you don't want to have exposure to all that. You want to build your own, folks. Build your own, as we always say we should do. We're going to talk about that in a bit. You know, biotech and genetic testing, a big deal that went through. I'm going to name some stocks out there. The future of testing is liquid biopsies, and it's just every day I'm reading more and more. It's crazy. But just real quick, I need to mention that Bitcoin is breaking out again. We have Bitcoin hitting the highest levels since January of 2008. And at that time is when it was falling. Right now, we have Bitcoin at 13,407, folks. You know, I remember, you know, just not too long ago, it was in, you know, the $9,000 range and saying it's going to go higher, it's going to go higher. I own Bitcoin for myself and some altcoins. But I got to tell you, man, I love the way it looks. We came very close to 13,500 just a couple hours ago. Again, now 13,004. The chart looks great. The reasonings for Bitcoin to go higher look great. And it's just the beginning. I'm telling you, this is just the beginning. Do not ignore the fact that there's much more upside to go here. And of course, you know, we have 2 newsletters out there that have altcoins in them. And those are the smaller coins. Those are the ones, if Bitcoin rallies to 20,000 and 40,000 and 50,000, like I believe it will, these altcoins, the right ones, if you're in the right ones like I believe we are, should greatly outperform Bitcoin, greatly outperform it. So if you get in run in Bitcoin, it goes from 10,000, again, it's 13.4 now, but 10,000 not too long ago to 50,000, it's a 5x return. Some of these altcoins should be up 10, 20, 30x, if not more, if you're in the right ones, and I think we are. But you must have a diversified portfolio of that as well. And that's what we have and we do for you. Don't forget to like, subscribe down below. Any comments you have down there, comment there. You can comment on Twitter at Matthew McCall. You can also go to investorplace.com/moneywire. We have a new URL, though. We just updated it. It's a very nice website. I think we had some more work to do on it here, but we're getting there. And right now, it looks pretty darn good. So investorplace.com/moneywire. Lucky you get to log in and see a big, I'm just logged in right now, see my mug there. But you get a lot of free articles on there. I'm just logging in right now. One is about small cap stocks. I mean, it's a lot of free articles and free reports. There's a lot of free reports that my team and I put together. 2 SPACs to buy now, 5G, Transportation 2.0, battery breakthrough, all free reports. Free. That's all you got to do is go on there. So check that out when you get a chance. Investorplace.com/moneywire. All right, so we talked about the market, buying yesterday. I probably do some more buying today. We talked about Bitcoin breaking out. It's not too late. Now let's talk about genetic testing. There was a deal today that came out, EXAS Sciences, which is a stock that is in our portfolio. Up today, 18.5% right now to a new all-time high. We're now up 35% in the stock. And we got the stock, by the way. We owned a company GHDX. It was bought by Exact Sciences not too long ago. So when it got bought, we got shares of it. And I said, you know what? I love Exact Sciences too. Let's hold on to this because I think it's going to take GHDX's technology and its genetic testing, and it's going to do a lot with it because Exact Sciences was much bigger, and so far so good. And what we're seeing here is Exact Sciences became big and famous, and the stock really rallied because of its Cologuard. And you probably see the commercials. We've talked about this before. The commercials on television, for some reason they play sports, maybe because it's kind of geared at men in their 50s and 60s. It's for colon cancer, detection of colon cancer. So they send you a box. You can imagine what you put in the box, and then you send it back. You look at a stock like this, back in 2008, 2009, it was literally a penny stock. 30 cents, 36 cents, 35 cents. And now it's at $126. So think about this. When I say you can make 10x, 20x, 50x, I'm not yanking your chain or pulling your leg or twisting your arm. That doesn't make sense, twist your arm. The first two make sense. 35 cents to $126. You could do the math. Say it takes 3 to get to 1. 3 times 126. 375 times your money. You can do a lot with 375 times your money, folks. 1,000 turns up into 375,000. 10 turns to 3.75 million. Just think about it. And, okay, it took you 12 years. Where else in the world can you make 375 times your money in a liquid market? Where? Where in the world? In 12 years. Where in the world can you do that? If you could tell me somewhere legally you can do that, sign me up. Granted, nothing's guaranteed, but I'm telling you, you build a basket of these small stocks that meet our trends, that have the potential, and you hit 1 or 2 of these, that's all that matters. I've been doing this for 20 years. It works. Oh, by the way, Dunkin, anybody see Dunkin stock? Has anybody bought Dunkin stock? Because you probably think I drink it and I support it so much. Looks like it's going to be going private, being bought by a restaurant group, up huge yesterday to a new all-time high. And you talk about a stock there. We don't have to be super risky. Dunkin stock is up about 5x just in the last 7 years. And that's just, all he sells coffee and donuts. I will say it's pretty damn good coffee, if I say so myself. All right, so Exact Sciences. So they came out with earnings, but the big news was, I feel like a newscaster again with all my information. They are buying a company called Thrive Early Detection. And it's honestly about a mile from here in Baltimore. Up to $2.15 billion in cash. Even though it's a private company, this is a big deal, real big deal, in stock and cash. And they have they're developing a liquid biopsy test called Cancer Seek. And it incorporates machine learning into it, which is AI, artificial intelligence, machine learning, into liquid biopsy tests for cancer. It's designed to detect multiple types of cancer at very early stages before you see symptoms. They also announced that they bought another company called Base Genomics, which is an epigenetics outfit. They're based over in England. And again, early cancer detection approach based on DNA analysis. I mean, man, I got to tell you, this is the future. I believe that at some point in the near future, I wish it was now, I wish it was yesterday, I wish it was tomorrow, whenever, when you go for your annual checkup, you get blood drawn now, right? They check all, the things they check. They'll be checking and putting it through and checking for early stage cancer. Some of these tests can get as early as stage 0, folks. Stage 0. And if you look at anything out there, anything, if you look at when it comes to genetic testing, if you get it early, detect it early, the chance of survival is fantastic. I was just reading somewhere where prostate cancer, if you get it early enough, your 5-year survival rate's literally 100%. It's all about getting early, and this is the future. So Exact Sciences is really moved over from Cologuard, which has been a big business for them, but now is really, really focusing on liquid biopsies. Nothing, you don't have to cut into anything, take anything out of your insides. It's literally blood. I mean, this is absolutely the future. I can't put this in your brain anymore. And that is why the stock, spending money, spending $2 billion, raising money, now to do another raise to pay for this, is up 18.5%. Very rarely do you see that, up 18.5% to a new all-time high. I got to tell you, I'm loving what I'm seeing here with this company, and I'm loving what I'm seeing with this entire sector. So let's talk a little bit more about this. They announced that they had a test not too long ago, a couple months ago, and the stock shot up on that, that they're really, the test for cancer through liquid biopsy has showed really, really good numbers, going after liver, lung, ovarian, pancreatic, stomach, esophageal cancers, overall sensitivity rate of 86%. At a specificity rate of 95%. I'm terrible at these medical terms, even though that wasn't a medical term. That was just me mumbling a word. But the numbers are great. And many of them that were caught were between stage 0 and stage 2. I mean, the importance of catching early, I can't emphasize this enough. So there's a couple other companies that are in this space, and there's quite a few actually. One is Guardant Health, GH, which is up 6% today. And I will disclose I own this for myself. So I don't own it for clients at Penn Financial Group. We don't have any newsletters. This is one I own for myself. This is my way of getting into it. And then I also own another one for myself too. And I bought these a while ago. So don't go chase these and buy these. They're not recommendations. I'm just saying I own them now. Is Illumina, ILMN. And this is a stock that has been, again, one of those examples of the huge winners where you go back to 2008 and it was less than $1. It was a penny stock. And it got as high as $400. $400 earlier this year. It's at $321. It fell recently. But it has an $8 billion deal to buy Grail, which is, again, a leader in liquid biopsy. So these companies have been doing well. There's another one out there I have no exposure to, Qiagen. The symbol is QGEN. They have some exposure as well. And again, a stock that has just done very, very well as of late, breaking out to a nearly 20-year high and then pulling back. Boy, the chart looks pretty damn good right now. Let me take a look at this because I didn't plan on talking about it. I just wanted to mention it. But because I like you all, I'm going to look at it. I can't believe I said you all. I guess living in Nashville a couple of years in the past brought out the real true Southerner. Qiagen, I look at the fundamentals, and it is obviously growing. I just don't see the huge growth in it. That being said, there is some potential. I'm going to do a deeper dive into it because really a lot of things in this area are great, but earnings are forecast to only grow 14% year over year. I look for a little bit bigger growth than that, but it is one to keep an eye on, folks, and the chart looks fantastic on it. But the bottom line here is you cannot ignore liquid biopsies. There are too many upside potentials here, and again, it's just you think about not only the early detection, the amount of money that's saved, the amount of lives that are saved. Millions, if not tens of millions of lives could be saved with this. I mean, it's unbelievable. Man, oh man, it gets me excited about where the future of healthcare is going, and it gets me excited that we could find these small companies, and there's a lot more out there I haven't shared yet, small liquid biopsy companies that are going to be huge. Our genetic testing portfolio, which was just launched in July of 2019, so a year and 3 months, 15 months ago, on average, that basket of genetic testing companies is up 185%. It might actually be more. Let me double check this. Last I checked, there's about a 185%. But I want to see how many stocks are in, so don't butcher this. I think there's 5 stocks in it. But our genetic testing portfolio has 4 stocks in it. It's up on average 193%. One stock was added July 31st of 2019. Oh, sorry. Some go back to 2018. I take that back. And the other 3 were added September of 2018. So just over 2 years. 2 years and 1 month, up 193% on average. 193% on average. We all know the market hasn't done much since then. And this is 4 companies. One's up 180%. One's up 198%. One's up 41%. And the other one right now is up 428%. All small cap companies, all probably companies you've never heard of. It's fantastic. I love this. And if I scroll down and look at our future of healthcare portfolio, 4 companies, and that was started with 1 in August of last year. The others were added in February this year and 2 in April of this year. The gains are 308%, 74%, 350%, 65%, for an average gain of 199.23%. I can't make this stuff up, folks. This is real. I'm looking at it. My early stage investor subscribers know this, and they're loving it. I mean, the future of healthcare, sometimes it may not be the most exciting thing, but my goodness, it's where money's going to be made. Genetic testing, biotech, you name it. Please don't ignore this stuff. It's still not too late to get in. All right, so I had to talk about that just because I saw the deal come through today, and I thought it was really, really important. So 3 more topics. I want to take some questions from Twitter, and then, or 2 more topics. And I want to talk about a scan I did this weekend. I worked all freaking weekend at my kitchen table. I mean, literally all day Saturday, all day Sunday. Yes, I did a football in the background, college on Saturday, pro on Sunday. My fantasy team, high scoring this week, back in first place. You're welcome. If you need any help with your fantasy team, let me know because I'm on fire this year. So, yes, it was a great weekend. When you have football and then you have work, finding new stocks, and of course around 4 o'clock I pour myself a nice scotch with 1 ice cube. You can't get much better than that, folks. You really, really can't. Open the windows. It's football weather. So let's take your questions from Twitter right now. First one was about Riot blockchain, symbol RIOT, Riot blockchain. Man, I cannot spell this morning. So Riot blockchain has had a hell of a move. It was down around 50 cents in March. It's at $4 today, up another 3.5%. This is a direct play, basically. It moves with Bitcoin for the most part. It's a $188 million company. It is one of the largest publicly traded Bitcoin miners. So they have all the systems to mine Bitcoin. Last year, they did a revenue of $6.8 million. It's projected in 2021 to do about $45 million. So that's pretty big growth. That's about 6 times growth, 7 times growth almost, 7x in a matter of 2 years. I mean, that's nice. But, valuation-wise, still trading about 4.5 times sales based on next year's sales, which for a growth company is not bad. There's a lot of software companies that are trading at 15, 20, 30 times next year's sales. So it's not that bad. But this really is kind of a proxy, I guess, for Bitcoin. Or Bitcoin's a proxy for this. You should flip around and say, if Bitcoin does well, this should continue to do well. If Bitcoin goes to 20,000 in the next 12 months, which I really think it very, very possibly could, even sooner in 6 months, this should do very, very well. Keep in mind, it's gone from $2.50 to $4 in the last month. It's extremely aggressive. But if you want to be aggressive, I don't think it's a bad play. Probably buying pullbacks, but it's something that's, it's really, really aggressive, just to let you know. Another company people have asked about a lot, and I've mentioned it once, and I'll talk about it again, but Palantir Technology, symbol PLTR, the recent hot unicorn that went public the last trading day of September. And since that time, the stock really hasn't done much. It's at 10.22 right now. It's up 2.7% today, up 27 cents. If it closes here, it'll actually be the best closing price ever. Not the best price it's been at, but the best closing price ever. So maybe it's getting ready to break out. This is the play that a lot of people talked about. It was like that secretive play out of Silicon Valley that nobody knew about. What did they actually do? All these contracts with the government. I think over half the revenue comes from the government. They had $742 million in revenue last year. Looking by 2024 to go to $3 billion. So it does have some nice growth, but it's already a $16 billion company. Next year, looking for about just over $1 billion. So trading at 16 times sales next year, which if you look at Riot, what did I say? 4.5. So 16 times. Obviously a much bigger company. It'd probably be slightly profitable in a couple of years, not there yet. But they use artificial intelligence and machine learning. They've got another contract with the U.S. Army. But they are a company that uses AI, machine learning, and data. Looks into data, analyzes data. It is a really, really interesting company. And keep in mind that its last raise before it went public was at around equivalent of $11.50 a share, and it's trading at $10.21 right now. So the early investors obviously are making big money, or unrealized, or realize that they're selling it. But the last investors haven't even made money on it yet. They're actually down. So I do think it goes up. I'm torn. If I had to pick buy, sell, hold, I had to pick one, I'd say buy. I'm not buying yet, but it is one that I'm keeping a close eye on. And, post IPO, I like to watch stocks a lot, and I keep looking at the chart over there, just trying to see if something jumps out at me. But it is one I'm definitely watching because I love the fact that they have AI, they have machine learning, they have contracts with the government, and the government always spends, so you have that going for you. I'm definitely keeping an eye on. This is playing the future. Gun to my head, I'd buy. No gun, I'm holding and waiting for a minute. Another question about tech while we're on. Somebody asked about the big tech breakup. What's going to happen if they try to break up big tech? I'm not worried about it. I mean, it's one of these witch hunts, in my opinion. People get pissed off because Google can follow you around, know what you're searching for. Then don't use the damn internet. Come on, man. This whole privacy thing, I get it. And I'm not saying we're not entitled to our privacy. But if we're going to post everything about our life on Instagram and Twitter and Facebook and everywhere else, what do you expect, folks? Come on. Come on. We want the good, but we don't want the bad with it. It is what it is. As long as you're not doing anything illegal or bad, I don't know. People don't agree with me, and it's fine. I come from a different cloth. I want privacy, and I don't want people knowing everything I'm doing. But if I don't want people to know things, I don't share that on social media. If I share something on social media, then I'm pissed because it's been exploited, and not exploited, but it's out there in public, and I can't get rid of it. Then don't post it. Don't post it. Think before you hit a tweet. Trust me, I've hit some tweets I regret, but it is what it is. It's who I am. So the big tech breakup, though, I don't think it's going to be an issue. And if they break up some of these companies, it just increases the value of the sub-companies within there. So I don't see it being an issue. I really, really don't. I think this is completely overblown. Somebody asked about BCRX, which is a small biotech company, BioCryst. I used to follow it back in the day. The stock hasn't done diddly in the last 20 years. It was up around $40 back in 2000. It's several times been down around $1. It's at $3.70 right now. I looked into it for the person. It struggled for years. They did have some revenue, so even for a small company, it's a $678 million company. They had revenue about $48.8 million last year. They are looking for revenue to go about fivefold to 2024. That is probably if they get a drug approved. Could be profitable by that time too in a couple years. They're going after PNH, which is a rare blood disease, is one of their drugs. The BCX 9930 is the name of their oral treatment for PNH. Again, a rare blood disease. If it gets approved, it'd be the first oral drug to treat PNH as a monotherapy. What that means, it's just one therapy. You're not mixing it with other treatments. It's just one treatment. Seems extremely risky to me, and I see better biotechs out there personally, and let's call it a junior biotech, small biotech. So to me, I'd stay away from it just because I think there's better options out there. Two more questions. One was about the impending crash they keep reading about. Well, start reading new websites and listening to new people because it's complete malarkey. Sure, there could be a crash, but why? Somebody give me a good, educated reason why. I saw something yesterday. It said, click on this, prepare for the next black swan. First of all, does anybody know what the definition of a black swan is? It's an event you don't know is going to happen. So that means you cannot prepare for it. I mean, such craziness that people put out there. These fear-mongering, drives me bananas. I mean, just look at the long-term chart of the stock market. It goes up. How many years is up versus down? I mean, it's one of the greatest, if not the greatest, avenue for the average American to take the money they work so damn hard for and let it work for them. Where else are you going to put it? You're going to take it to your local bank and get 0.2%? With inflation at 2%, and it's going to go higher, you're getting crushed. You're going to be losing over 2% a year sitting in cash. What else are you going to do with your money, folks? Don't pay off your house at a 3% mortgage. Are you out of your mind? Don't listen to this Dave Ramsey and Susie Orman bullshit. If you can borrow money at 3%, why the hell would you pay it off? That is not bad. Any wealthy person out there that's made it on their own, me being one of them, you borrow. When I go buy a home, they ask me, so you want to put 20% down? I said, are you absolutely crazy? I want to put down as little as possible when I could borrow money this cheap. The bank wants you to borrow more or to put down more. Of course they do. It makes their loan less risky. They don't want to lend it at a couple percent because they're borrowing. The borrowing margin's so low. If interest rates were 7%, they would let you borrow everything because they make bigger margins. You have to realize where the banks are coming from, where the mortgage lenders are coming from. You want to borrow. Don't borrow well beyond your means. But if you can leverage yourself, it's what you want to do. This weekend, I went through a list of 4 or 5 things that I'm looking to buy. And everyone is leveraged. Buying another rental home. Opening a new Pilates studio. Leveraging the money that I worked so damn hard for. Let that money work for me. Let it work for you. And number one way is to put it in the stock market. If you're capable of leveraging and doing other things, do that too. But don't listen to this conservative, not conservative as far as political concern, but the conservative approach of these Dave Ramseys and Susie Ormans and saying, no, don't borrow, pay your debt. That's BS, folks. Complete BS. If your credit card's 22%, absolutely pay it off. But not if you have low interest rates. It doesn't make sense. All you need to do, if you're borrowing at 3%, is make 3.1% somewhere, and it's better off. If somebody could say to me right now, Matt, I'm going to lend you money at 3%. Here, just take it, 3%, $1 million. Give it to me. Because I'm putting it right in the market, or I'm going to buy another business. Because I know that I can make more than 3% with that money. And that's all you have to ask yourself. You can make more than 3% of what you're paying? It's the way to do it. And you know, I got on this because of the impending crash about all the BS that's out there. I saw some idiot the other day. I mean, he looks like some frat boy telling people not to put money in their 401k. Max out your 401k. At a very minimum, max out until they stop matching you. But I will tell you, folks, by putting money in your 401k, it lowers your taxable income. So there's a bonus there as well. Plus, I will tell you this as well. You'll say, oh, I'll put it away in my own. You won't. Take it right out of your check. You'll never see it. I max mine out every year. Max it out. Please. I started my first company, Penn Financial Group, 16 years ago. In 2004, late 2003 was when I set up the LLC in Denver, Colorado. And you know what I started with? My 401k, after working at Schwab for a couple years, I maxed it out. I took it out and used that to start the business. And I got to tell you, that worked out pretty damn well. So put the money away, please. Please, please, please. Sorry for getting off on there. Okay, so a fun question. Somebody also asked about, is the U.S. dollar turning into the Zimbabwe dollar? Does anybody know the story of the Zimbabwe dollar? I'm not getting into it today because we're already 30 minutes into the podcast, but they had a period of inflation back in Zimbabwe, 2007, 2008, 2009, what's called hyperinflation. And some of these numbers are unbelievable. Their peak month-to-month inflation, month over month. So from October to November, month-to-month inflation peaked at 79.6 billion %. I mean, I can't even do the math there. It peaked mid-November 2008. The year-over-year inflation was 89.7 sextillion %. 89.7 sextillion %. I don't even know what the hell that means. Unbelievable. April 2009, they stopped printing their currency, of course, because other currencies from other places are being used. And then mid-2015, they announced they completely switched back to the U.S. dollar. But in June 2019, the government came out and reintroduced the Zimbabwe dollar. It's unbelievable. By mid-July of 2019, inflation increased already to 175%. I mean, by July 2020, the annual inflation was estimated around 737%. Something's not working there, folks. Something's not working. But no, I don't think we go there. I think we could have some serious inflation going forward. I don't think we get there, though. But that's a good question. And I will tell you, you think that's bad. There's some other times of hyperinflation. The highest inflation rates per day. Zimbabwe is over 100% per day, going up per day. You know, the worst, according to what I saw here, was Hungary in 1946, over 200% daily inflation. daily. 200%. That means your can of soda, say it's $1. Tomorrow it's $3. Over $3, over 200%. Yugoslavia, 94, up over 50%. I mean, it's pretty crazy. You look at some of these numbers. The other recent ones were Armenia and Turkmenistan in 1993, both double digits daily. So one more thing I want to touch on, and this is the fun one, because you all like when I talk about stocks I come up with, don't you? I feel like you do. If you don't, tell me to stop talking about stocks. Well, you probably shouldn't tune in then. But all right, here we go. So this weekend, as I mentioned, I worked a lot this weekend, and I went through a bunch of my scans trying to come up with new small cap ideas, for my subscribers, early stage investor, for my clients at Penn Financial Group, and of course for myself. And I came up with a couple, and I bought some of them yesterday. One off this list I bought for clients, one I bought for myself, both biotechs. But I will say there's a couple out here that, boy, they really jumped out at me. I actually bought one this morning for a client over in Germany. Deals with energy storage and micro batteries. It's already up since we bought it. So let me pull up one here that's got some nice growth. But what I look for, and this is very important, it's very key to finding small companies, is looking for companies that have potentially small revenue now, but in the next couple of years have potential to grow that 10, 20-fold. So I'd look for that. And then also what's very important is that what I call a path to profitability. So probably not profitable now because early stage, you're putting all the revenue you make back into growing, but eventually you want a path to profitability. You want to make money. So let me pull up one of these here, and I'm just randomly picking one from my list that I came up with and making sure it fits what I see here. So this one is a company called BioLife Solutions. BLFS. Again, none of these are recommendations. I'm just saying I came up with this weekend. The stock's been on fire. It's got a great looking chart. It's a $918 million company, so it's not super tiny. They develop, manufacture, supply bioproduction tools for cell and gene therapy. I mean, this kind of fits in our wheelhouse, doesn't it? If you think about it. We take a look. Last year, it had revenue of just under, it's 2 years ago. Last year had revenue of about 27.4 million, 27.4. By 2024, we're looking at 168. So you're looking at some really big revenue growth. From 2017 it was 11, up to 168 in 4 years from now. You also look at earnings per share, looking to make $1.60 by 2024. That's big. I mean, that's got a great path to profitability. It's got huge revenue growth, huge earnings growth, projected annual earnings growth of 49% a year, revenue growth of 32% a year. Remember the law of 72. Law of 72 means you take whatever percentage you're growing annual. So say it's 36. 36 into 72 goes how many times? Twice. That means you'll double every 2 years. So that's 32%, very close to doubling every 2 years. That's big growth, folks. Because when you go from 10 to 20, 20 to 40, 40, 80, 80, 160, you see how quickly exponential growth goes. Earnings at 49%. That means every 2 years you're more than doubling. I mean, you're seeing huge growth for a company like this. So again, it just popped up in my scan. I've heard the company, didn't know anything about it. I'm doing a little bit deep dive into it. But again, I'm not saying buy. I don't own it. I have any exposure to it. I might buy it. I might not. I don't know. But I'm just showing you the kind of companies that are out there that you're not going to hear on Wall Street. You're going to hear them from me. You're not going to hear them anywhere else. And that's what we're looking for. We're working for companies where you're not going to find it in Wall Street. You're not going to find it on CNBC. The kind of companies that I'm looking for are under the radar. They're not the big companies yet. So let me pull up another one here for you. Let me see if I can pull up a good one here for you. Give me 1 second. And again, this is just, I'm looking at these the same time you're looking at them. I looked at them this weekend, as I mentioned, but that's not one. Let's see right here. This one is quite interesting, if I'm not mistaken. This one is going to be called Aspen Group. Symbol's ASPN. This is a company that's about $238 million company, so it's definitely a true micro cap. It's an education technology company. Provides online higher education. I mean, just think about where we are right now with education. Online higher education. It had revenue last year of about $45 million, looking to go up to about $145 in the next 4 years. Losing money right now, but looking to make almost $1 by 2024. We have annual earnings growth forecasted annual 88% in the coming years. Forecasted revenue growth, 26% in the coming years. And look at the chart of the stock, looks pretty damn good. And, we all know where we're going with education online. I want to get everybody back in the classrooms as much as anybody else does. But a lot of people, we are moving in this trend already. So there's one to keep an eye on. This is, both of these are meeting trends that we like, and that's important. We want to look for, if it meets the trend as well and has the fundamentals around it, man, oh man, that's exactly what we're looking for, folks. Yeah, man, there's so many on here. I can't share them all, but there's a lot more that are on here. And I got to tell you, every weekend we look for more of these, and I find more and I find more. And this is where you're going to make money. You get a basket of these small companies, and all you need are one or two, and you have stories like Exact Sciences up 375%. You have these real companies out there that at one time were small companies. All big companies at one time are small companies. These are very overlooked. It's almost like VC investing. We're doing the homework for you. The problem is it's very difficult to find them. We have to do this homework for you, and we love doing it. It's my passion. I can't, when I get this stuff, I come in Monday morning, I sit down with my CEO, I'm like, look at this, what I found, look at these companies, I get so damn excited. It's amazing. So, man, we're here for you. So go to investorplace.com/moneyline. Thank you so much. Like, comment, subscribe, share with your friends. Let me know what you want to talk about, and we'll try and do that. Any topics you want me doing special videos on, let me know as well. We have one up there on SPACs. We have one up there in Tesla. Anything you want me to look at, we'll do it for you. Go out there. Have a great rest of your week. I got a busy one here, so if I'm going to look tired on Friday, it's because I am going to be tired. Even though golf Friday, it's too busy of a week for me. 6 a.m. Pilates every morning. It's kicking my behind. But I'll tell you what, I feel pretty damn good. All right, everybody, have a wonderful weekend. Go out there, hug somebody, tell them you love them, smile, be safe, number one. Again, I'm Matt McCall, and this has been your Moneyline.
Moneyline with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.